Hi folks, today we're going to talk about self-assessment payments on account, who they apply to and why are they there. So really nice and straightforward. Payments on account are advance payments towards your next tax bill. They help spread the cost of your tax across the year, and you need to make sure you plan ahead and save for them. Now, making tax digital for income tax comes in from April 2026, and although there is no current plans confirmed by the revenue to make the payment on account system quarterly, I will be coming back to this video in October 2028, which is when I expect the Chancellor, whoever that will be at that point, to say that that is when it's going to happen. So we'll keep an eye on for that for 3 years' time. So when are they due is January the 31st and July the 31st for those payments on account. And if you haven't paid enough through the payments on account, you have a balancing payment the following January. Now, they only apply if your tax bill is greater than £1,000 and less than 80% of your tax is deducted at source. So if, for example, you have £10,000 worth of tax to pay per year and £9,000 worth of that is through employment, that's 90%, you would not have to make payments on account. Okay, so we use a great example of this handsome chap over here. He's a self-employed accountant and his 23-24 tax bill was £3,000 and he submitted his tax return before the filing deadline of the 31st of January 25. So he'd have that £3,000 balancing payment to make. He would then have his first payment on account of £1,500. Remember, half of the previous year's tax on the 31st Jan. So he'd have £4,500 to pay that day. And then his final payment on account would be July. Now, you notice that first January payment there is 4.5. If it's your first year of trading, you could end up having to pay 18 months worth of tax in one go. So make sure you keep an eye out for that. What then happens the following year is, let's say Tom has got a tax bill of 3,600. He made his January and July 25 payments on account, so he's paid 3,000. So he'll have a balancing payment of £600 due on the 31st of Jan 06. And then from then on, you remember, payments on account are 50% of the previous year. He'll have £1,800 to spend on tax on the 31st January and 31st of July 26 for his payments on account. So you can reduce these payments on account, but I would only suggest you do that if you're absolutely certain that your tax bill is going to go down significantly, because you will be charged interest and penalties if you get it wrong. So for my clients, we look at doing it in June, and that's the sort of latest I'd look at doing it is, get their accounts for the previous year done with their tax return and work out if POAs can be reduced. So hopefully this has all made sense. Just remember, January and July, your payment dates, plan ahead, make sure you save up. And if you want to get in touch, there's my contact details there. Hope this has been helpful. All the best.